The one thing I want to say about gold, if we're right and it goes to 5,000, it's not going there in a straight line. There's going to be ups and downs. Trading is emotionally taxing.
We've got the leadership back in the lead today. Uranium miners up 2.5%, gold miners up 1.5%, internet stocks, solar stocks, the Qs are all up 1%.
I have only regretted spending money once. Remember when I bought that Can-Am 12 years ago, that motorcycle? That was a mistake. I shouldn't have bought that.
Nvidia dipping its nose below the 50-day. And what happens when Nvidia dips its nose below the 50-day? What's happening, good people? We are here to record Macro Dirt Podcast number 62. I've got my co-host who borrowed Klaus Schwab's outfit, Jared Dillian, here. And we are going to talk about the gold breakout, mother scratchers. Where do you want to start, JD? Take it away. Gold is above 3,500 in spot. That's been your call on where the actual breakout is taking place. Take it away.
Yeah, I mean, we've been talking about it for like 5 months, and you were kind of like, shit or get off the pot when it comes to gold. I said that it was this, beautiful consolidation. It was going to break out eventually. Actually, I'm kind of, I did buy gold above 3,500. I'm kind of mad at myself for not buying it around 3,400 because it started to ramp. It looked like it was going to break out, but whatever. It's going to run to 5,000. That's the next resistance is 5,000. So, if you're listening to this and you think, oh my God, I'm too late, like too late are the most dangerous words in trading, right? Or I missed it. Yeah. I missed it, right? Like you're looking at a stock, it's trading at $10, it goes to $12, it goes to $13, and somebody says, oh, you should buy that stock. And you're like, too late, I missed it. And then it goes to 80, right? Like, don't say I missed it. You never missed it. Right. There's plenty of pie left.
Yeah. Good point. Yeah. You always said too, don't be a dick for a tick.
Yep.
Right. Applies here as well. So can I go over, I put together a little bit of a probability matrix on this gold breakout. And I'd love for you to tell me what you think. Okay. 5% chance it's a false breakout. Right, that we trade up to here above 3,500 and completely turn around and crash into the moving averages, 5%. I got a 15% chance it's a peekaboo breakout where we break out up here above 3,500 and then we settle Friday afternoon, 3,350 offered, and we go back to 3,300 at 3,500. 15% chance of that. I got a 20% chance that it's a stair step higher where we break through 3,500 and the new range is like 3,500 to 3,800 or 3,500 4K. 20% chance of that. 50% chance we gun right to 5K essentially. 10% chance this is a parabola to 10K. Oh my God, it's not stopping here kind of stuff.
Yeah.
What do you think that needs to be much of an adjustment on those percentages?
I mean, look, the first two scenarios I don't think are going to happen, but as a trader, you have to consider all possibilities.
That's all. That's all.
Like, yeah. So, I think a 5% chance of a failed breakout, like, sure, that could happen. Mm-hmm. I will say that it traded up to about 3,550 and it's holding. Mm-hmm. It's holding pretty well. So
the price action is very, very orderly, which is kind of what you want to see if you're long for the breakout, right? Yeah. Now, the beauty about this is that we're just trying to be risk managers and point out the things that could happen, potential scenarios. I got shit for saying, for pointing out some hubris that I think is out there, right? Gold Forecast on Twitter posts a picture yesterday. Who's laughing now? With a picture of Peter Schiff with gold teeth, gold front, right? Great tweet. No complaints about it. No complaints. I love it. More of that, right? But it's a sentiment gauge, right? It's a little bit of the beginning of a little gold hubris, right? Now I point that out and people come into my slide into my DMs and say, "How come you're picking a top? Like, what are you doing?" And I'm like, "I'm not picking a top. I'm long. Number one, I'm
Yep.
just looking around I'm looking around the ring, and I'm talking about what I see."
Yep.
Right? That's very different than, because you got to know when you want to transact on your long, and what is your next transaction? Are you buying more, or are you making a sale? So that's why we're paying such close attention here. But there is a little bit of frothiness to this breakout for me. Everyone on Twitter is going, gold's not going down. Fiat currency is going down against gold. It's like, I know.
Well, let me just chime in on the sentiment here.
Please.
So I think when I talk about sentiment, you always have to put it in buckets, right? So in this case, you have like gold bug sentiment, which is like frothy, right? Mm-hmm. But in terms of like the 98% of retail investors who are in DoorDash and Carvana and Bitcoin and stuff like that, dude, they don't even know a breakout happened. Like nobody knows. Like, it's not in the news. Like, did you see any like Bloomberg or Wall Street Journal headlines like gold makes new highs? Like,
no, that's fair. It hasn't been that much, but we already got through the period of how to invest in gold, a primer, and when that Wall Street Journal newsletter came and went, you know what I mean? So there's been a little bit of that where, like I said, I've got junior Cornell lacrosse players texting me up going, "What do you think of this gold breakout? Should I be buying fizz here? What's your thoughts?" I feel like those guys got better things to worry about, but that's all that, that's kind of, those are all the things that I read. It all goes in the pie, right? It all goes into the sentiment conversation, I think. But, we're on the lookout for gold laser eyes, right? Like, it was the end of the Bitcoin rally. It's going to be the end of this rally at some point, but maybe it's at 10K. I have no idea, JD, you mentioned that in the rates markets, if we can switch over really briefly, that a potential scenario was that Trump was going to get rates lower, the long end was going to fly higher, and that was going to be embarrassing, and they could potentially have to do yield curve control from there. Have I framed your argument fairly?
Yep.
So Jason Geffert put out a tweet today at Sentiment Trader, which is really interesting. It says, the Wall Street Journal noted that the yield spread between the 2-year Treasury note and 30-year Treasury bond has steepened to the widest point in several years. The last 2 times this yield curve cycled from inversion to a spread of plus 125 basis points, it coincided with the 2 most wicked bear markets in generations. Right now, this has now widened to over 125 basis points from minus 100 basis points. Yep. What are your thoughts on that? Do you think that this is something that could cave the risk complex in, or what are your thoughts?
Yeah, so basically, whenever a yield curve inverts, that is a signal that you're going to get a recession, right? But then what happens is that the Fed cuts rates, the yield curve steepens, and that's when you actually get the recession. So when I was at Lehman, this was in 2007, rates were up around 5.5%, something like that. And the Fed started to cut. I put on a steepener. We've talked about this because I talked about it in Street Freak. I had $1 billion worth of 2s and $200 million worth of 10s. And I made $5 million on this steepener. But the summer of 2007, when that steepening happened, was when the shit hit the fan. Mm-hmm. With the economy, with subprime, with the housing market, with the stock market, that's when the shit hit the fan. So, this is kind of like Farmer's Almanac stuff, and Jason Gepford does good work. He does really good work. And all he's really saying here is like, look, when the steepening happens, that's usually when things start to come apart. Right. So who knows?
Yeah, I think it's totally fair. That's why I wanted to get your gist of it, and when this coincides with, another, scary 1% pullback in the S&P, it's just a sign that we should sit up in our chair. So if we talk about the S&P pullback for a moment, and we're talking about the one from like 6,550 to just below 6,400, it's been a total rotation to me. We've got the VIX into the high teens, not into the mid 20s. We've only had one tick extreme greater than minus 1,500 in the S&P on the downside. That was yesterday during the big 75 basis point sell-off. We did not graze the 50-day moving average down on the lows. And whether you like it or not, there are now 3 higher lows that the S&P might be able to launch pad from. That's one of the scenarios I'm thinking of, because everybody's getting bearish now, thinking there has to be a pullback because gold is going higher. Riff on that for a second. What do you think?
Yeah, I mean, yesterday was kind of an interesting day, and when I say yesterday, I mean 2 days ago, because this is going to come out tomorrow.
Yep.
Tuesday.
Yep.
The S&P was down about 1.6% at one point.
Right.
And I was pressing shorts. And then it rallied to almost unch on the day. And then Google had the antitrust case rule in their favor, and it gapped up after the close. And now, so we had a gap lower, and now it's filling the gap. Like that Tuesday candle is a very bullish candle.
Yeah.
Like if you open it unch and you sell off to the lows and you close it unch, like that's a bullish candle. Right. So look, as much as I like to play, for a whole bunch of reasons, I'd rather be short than long. I like to play on the short side, but I cannot dispute that the price action on Tuesday was very positive.
That was one of the most valuable pieces of macro dirt content that we ever put out there, because I just got you to enunciate what I was going to say. That is just awesome. No, because I feel like the whole pullback in equities is just like a microcosm of Nvidia dipping its nose below the 50-day. And what happens when Nvidia dips its nose below the 50-day? All the short-term over-the-day options guys get short out the wazoo. By 2 o'clock, Nvidia bottoms and just starts levitating back to unchanged. And now what you've got is Nvidia skipping along the 50-day moving average to where now the risk is that this thing opens up 5% one morning. So that's kind of how I'm looking at it. I'm not taking my eye off of semiconductors. I do believe that if there's a risk to the tape, it's that Nvidia bumps its head into this conversation where we're talking about it versus Canada and India's GDP, right? Market cap and Nvidia. And the fact that it's a $4 trillion company like Microsoft, and potentially now it cascades lower. To me, that's the risk to the market, where if Nvidia and some of the big cap stuff backs off, maybe we get a pullback to 6,100 or something like that. But I think dips are going to be bought, and I'm still bullish stocks. What do we need to touch on, JD, in the markets? Are we leaving anything out?
Well, I want to talk about the data we just got. The JOLTS data just came out.
Hit it.
It was weak. It was lowest job openings in a year. Pretty predictable reaction from the markets. Bonds ripped. By the way, dude, I think it looks like somebody had the number in bonds, because bonds ripped into the print and then they ripped after the print.
Through the print, yeah.
I mean, like... It looks like somebody knew something,
That is, it does look like a steamroller came through.
So dollar sold off, gold went up. I mean, like I said, pretty predictable reaction. Kind of confirms what we already know, which is the labor market is kind of petering out, and it's another arrow in the quiver for a Fed rate cut in September. So,
yeah, good point. Good point. Just while we're on the equity rotation, let's talk about the equity rotation today, which is Wednesday, just for a moment, because we've got the S&P trying to recover behind that Google and Apple rally on the Google headline. We've got the leadership back in the lead today. Uranium miners up 2.5%, gold miners up 1.5%. Then you've got internet stocks, solar stocks, the Qs are all up 1%. I mean, that's well balanced against the downside, which is all energy and natural resources, right? So we're rotating back and forth, cyclicals, natural resources, and tech all over the map. That covers it for me, man. That was a great point. That's to me, this rotation is another feather in the cap of the idea that the S&P is just fine. Regardless of what's going on in Japan's bond market. You want to go off markets?
Yeah, man.
Let's do it. You wrote a great Substack post called The Relationship Between Time and Money, which is one that I dove right into because I always weigh things like that all the time. I'm going to start with a quote from Benjamin Franklin. Time is money. Then a quote from JD. Time is more important than money. You can always make more money, but you can't make more time. 100%. So it was a great blog post, a Substack post about the kind of thing where you just buy the pre-made burgers in the grocery store so you don't spend all the time making the burger yourself because you can't get that time back, right? Tell us a little bit about your thoughts about time versus money.
Yeah, like, I think about this from a personal finance perspective, right? Because you have people who make multiple six figures and they go to the grocery store and you can buy the 2 pounds of ground beef, or you can buy like 8 burgers, like 8 pre-made burgers. And the ground beef is like $2.50 a pound and the pre-made burgers are like $2.75 a pound. They're like, oh, I'm going to save money and get the ground beef. So you take it home and you're making these burgers and you're getting your hands all greasy and stuff. And it takes you like 20 minutes. Then you try to wash your hands and you can't get all the grease off your hands. Dude, it's literally like $2 you're trying to save. You know what I mean? Like, a machine makes the burgers. It does them better than you and faster. Just pay the $2. Now, look, I got a lot of pushback in the comments because people are like, well, I like to put butter in the burgers. I like to put salt and pepper. I like to do all this other stuff. That's fine. Like, if you want to doctor up the ground beef, that's fine. But the fact is that you should be using your money to get time back. The 20 minutes you spend making the burgers, you will never get back, right?
Yep. So now, where I am going to push back on directly on anything that has to do with consuming food for the most part. Now there are certain things where, like the burgers, it's like I'd rather go buy chuck and sirloin and grind the meat and make the world's greatest burger for myself with a little shredded Gruyere cheese and a beautiful bun. You know what I mean? But that's the chef in me. With most of the other stuff, though, I totally agree. Like you think about things like housekeeping, or moving or painting a room or having handyman work done. Like for me, like if there's a leaf in my driveway, I call the landscaper. You know what I mean? Like I'm not touching that. I'm not going to go near any of that shit. I'm not doing any gardening. I'm lousy at that stuff. So that stuff, I believe, like I wouldn't even spend a moment doing that. But if you turn it on its head, I think it's important to position yourself to have money to drop some bombs on some really special moments in time. What do you think about that idea?
What do you mean?
So, for example, I was 2 years out of college looking to scalp tickets outside of Madison Square Garden to see Pearl Jam in 1992 at the Paramount Theater, which holds about 1,800 people. You know what I mean? And I whipped $300 out of my pocket cash to buy a ticket to get into that concert. Now, by the way, that's $700 in 2025 dollars, right? Yeah. So it's not a cheap ticket. That was way more money than I had 2 years out of college to spend on something like that. The reality, though, is that I get to take that concert to the grave with me. Right. That's along the lines of that Mike Tyson interview where, he was like moments in time are the only thing that you get to take with you. So that's where I believe that you can spend money on creating moments in time like that. Would you agree or disagree?
I do agree. I mean, there's a lot of people who say that you should spend money on experiences.
Yeah.
Because you get to have the memory.
That's right.
I actually... Like, I'm a little bit different. Like, I do like to spend money on experiences. I had a great vacation to Greece a couple years ago. Like, I'll never forget it. It was really awesome. Mm-hmm. I also like to spend money on stuff, like physical things. Yeah. Like, I have a lot of art in my house. The art makes me happy. I have this piece of jewelry here. I like to buy jewelry. I like to buy
Klaus
clothes.
Schwab's blazer on. That wasn't cheap.
So I do like to buy money on stuff too. I got the watch, whatever.
Yeah.
So
yeah, you have a little bit more of a materialistic urge, and I still argue that is by virtue of having no kids, because I think that's where all of my I would love stuff like that. I'd like to have 11 guitars instead of 4. I'd love to have 3 trucks instead of 1. I'd love to have 10 times the art that I have hanging on my walls. But I think that's where a lot of my expendable income went. But I'm one that, like, when I look back on, like, when I cracked my wallet open, Jesus Christmas, like, I got to stand, like, one row in front of the stage at U2 for the Zoo TV tour. I got to be in Yankee Stadium for when Derek Jeter hit a home run and won the game and became Mr. November in 2011. You know, like, man, like if I think of the times where I was like, nah, I don't want to spend money on that. It's like, oh my God, I would be a different person because
I have only regretted spending money once.
Really? On what?
Once. Remember when I bought that Can-Am about 12 years ago?
Yeah.
That motorcycle?
Yeah.
That was a mistake. I shouldn't have bought that. I bought it for 19 grand. I owned it for like 5 years. I puked it for 3 grand. Like, that was a mistake. But aside from that, like any clothes, any jewelry, any trips, like anything, like I have never regretted spending that money. I just took a trip to Miami with my wife, like a little honeymoon trip for our anniversary.
Oh, nice.
We stayed at the Fiena Hotel. We got upgraded to a suite, and it was like worth it, like absolutely worth it.
Yeah. Yeah, that's what I'm talking about, you know, cracking, you're putting yourself in a position to be able to plunk down a couple of bombs for experiences.
Yeah.
You know, because that's, you know, like I said, that, like we said, spend money on experiences. That's where the best bang for the buck is. So I think that's interesting. Do not make your own ice cream. You know, like that's one thing that I see. That's like you say, like making burgers, making pizza. Like, what are you, out of your mind? The same thing with ice cream for me. It's like, have you heard of the company Häagen-Dazs? Like, they've put a lot of thought into this. They're really good at it. Like, don't even bother. Don't bother. Go spend the $7. You know, so that's what I think on things like that. What else do we got off market? Anything good, JD?
Yankees are rolling. So I got to tell you, they've got 8 players who have the potential to hit 20 home runs this year. So you got Judge, Jazz, Bellinger, Grisham, who hit a second grand slam in 3 games. Volpe has, I think, 19. Austin Wells has 18. Ryan McMahon, like, I mean, they have like the most home runs in the major leagues, but you know, like you said, like everyone in that lineup has the potential to hit a ding dong, and it's just really exciting, you know.
JD, you know what else is interesting? The last time we talked about the Yankees, you and I, who are 2 huge lifelong fans, were selling them down the river, saying how bad they were, right? They literally, they turned around, they turned into another team from that day. You know what I mean? Like, we marked the sentiment bottom.
It's sentiment trading. It's
sentiment trading 101.
Yeah.
You and I were so disgusted we couldn't even put the games on. You remember? And now last night I'm jumping out of my seat with the home run, with the granny.
And Framber Valdez on Houston had given up 2 home runs all year.
I know. I love
And he
that.
gave up 2 home runs last night.
I know. That was so awesome, man. I love doing that. Anything you can twist the knife in Houston. I'm still pissed off for them cheating in that World Series, man.
And Altuve got the MVP in 2017 instead of Judge.
What a joke. Please. I mean, that like most politically motivated Major League Baseball move I've ever seen. It won't be the last one, though, will it? You know?
No.
That's it. But that's it, good people. We're going to ride the gold breakout. We're going to be patient and let it show us something. We're going to be patient with this S&P pullback because, in my opinion, there's a better chance that it gets back on its horse. There's a lot to watch.
The one thing I want to say about gold before we get going is, if I'm right, if we're right and it goes to 5,000, it's not going there in a straight line. There's going to be ups and downs. There's going to be big pullbacks. Trading is emotionally taxing, right? Like you have a thesis, you think the thesis is going to play out in a straight line. It doesn't play out in a straight line. You have all these emotions along the way. You just have to relax, calm down, let it happen. It's going to happen. You know?
Yeah, that's great advice. And you know, it's always something to think about too, is that everybody in this game now, like we're sitting in it, like the gold ring is packed. You know what I mean? Like everybody and their mother is in the gold ring with a position on, and you got to consider like, you know, all the little subplots that are going to take place on the way to 5K. So that's what we're going to try to flesh out along the way, something that we're probably good at with our experience. And thanks to everybody that continues to sign up for the Macro Dirt Dual Sub. The cashier register is ringing. Everybody is happy with what they're reading, given the feedback that we've gotten. So jump in, treat yourself to a dual sub.
I just got to say, we've been doing this podcast for over a year now.
Mm-hmm.
Plenty of opportunity to jump in on the dual sub. And I know there's a lot of people who are observers and spectators, and they like to watch the podcast. Remember what we said. I've never regretted spending money.
Yeah.
Or fork over the cash, see what we're talking. Worst case scenario, you're like, all right, this is dumb. Like in a year, like you cancel and it's fine. But I don't think that's going to happen. I think you're going to be with us for life. You know?
I agree, man. Drive for show and putt for dough. And we've been putting for dough for years now, right? And we're just going to continue to. So the dual sub is actually a great value play if you're a value investor. And we'll end on that. That's the end of Macro Dirt Podcast 62. We will see what happens next week, good people. Hasta la vista.
Smell you later.
Smell you later.